How's it going, everybody? It's Stas here. So the stock market had a very strong day today. S&P 500 up $23, up 0.75%. The Dow Jones up $114, up about 0.45%. And the Nasdaq did very well today. Big Tech did very well today, up 1.82%. Nasdaq up $190. And in this video, like we always do all across the week here on the channel, we're going to be breaking down the stock market, taking a look at some technicals here, going over where we could be headed over the next couple of days. And I also want to break down a bunch of stocks that I'm looking to buy right now that could be on the verge of breakout. And a lot of these stocks are on the verge of breakout. And I also want to break down what I've been personally doing in the stock market as of late. So a lot to go over in this video. And of course, we're going to talk about some earnings, what to watch out for this week. So if you guys find value, as always, hit that like button for me. Consider subscribing to the channel and check out all the free links down below in the description box if you want to join our Discord chat, Facebook group, and if you want 2 free stocks from Webull valued up to $1,400. Again, all of those are free and linked right down below in the description box. So let's get into it, guys. The markets closed about an hour ago. I'm filming this right around 5 p.m. That doesn't really matter, but I figured I'd let you all know that. And the S&P 500 again ended up going up $23, up 0.74%. And overall, the bulls won the day today, and let me explain. And this 10-day chart that you guys are looking at is going to tell a lot. It tells a whole lot about what's going on the S&P. Notice how back in the middle of July, literally 2 weeks ago, back on the 13th of July, we struggled at around 32.30. And mind you, these are levels that we've been talking about on the channel for pretty much this whole month, right? So we actually got rejected at 32.30 on that day on the 13th of July. We also double topped at that same level on the 15th of July, and we failed as well on the 17th of July before rallying out and hitting that high at about 32.80, which was just 3 trading days ago, right? So this is telling me one thing. The fact that, okay, we broke out of 32.30 today, that is telling me that we broke out that resistance, obviously, right? And now we might be filling the gap up to the next point here, which is at 32.50, which is where we held as support on the 21st of July and a little bit on the 23rd before breaking through it. So at this point, we're trading between 32.30 and around 32.50. So at this point, watch for the 180, or not the 180, the 50 SMA here on the 10-day, 30-minute chart. Tomorrow, you guys can see it actually did close right under that. So tomorrow on this time frame, if we break this 50 SMA on the S&P, on this time frame, watch for the fill up to 32.50. That should happen. We might even get a gap up pre-market and already be there. We'll see how the futures end up looking like, but watch for that gap up. And if that level breaks, then we're going to go and test those highs that we were at on the 21st, 22nd of July, right around 32.80. And from there, we might be getting to those levels pre-crisis here that were in the 3300s, maybe all-time highs here on the S&P. That is kind of what I'm looking at. So ultimately, guys, the bulls won the day today. It's very obvious, and even on this intraday chart, you can see, I mean, we broke out of 32.30 this morning, pulled back down, held 32.20, also a pretty big level from Friday. Good hold there. And we rallied out, broke 32.30, and we actually retested it as a support before rallying into the close, and we ended up closing at about 32.40. So very good close here for the bulls. Watch for 32.50, 32.80. Those are coming up in terms of resistance here. And when it comes down to the Dow Jones Industrial Average, it lagged today when we're talking about the 3 major indexes. And let me take a look at the Russell now that we're talking about it. Russell up 1.2%, so it lagged behind all of the 4 indexes, at least the ones that I personally track, right? And ultimately, we actually held 26,400 today. I mean, that's a good sign for the bulls, although we were only up 0.4%, and it was a green day nonetheless. And the fact that we're holding that old resistance from really the middle of June up until the middle of July. I mean, we struggled there for a whole month. The fact that we held that today, rallied up, had a green day, that's a pretty good first step here. Now, for confirmation for more upside on the Dow, I mean, very simple. We're going to have to break out of this resistance that's been plaguing the Dow the past 2 days. Honestly, the past 3 days, right around 26,600. That's where we failed on Friday to break out. We failed earlier today there, as well as at the market close. So I'm thinking if this level breaks, it's also an old support from, what day was this? On Thursday, I believe. So in general, if 26,600 breaks, that's where I'm seeing a big gap fill up on the Dow Jones, probably back up to 27K, which is also deemed to be a pretty strong resistance on the Dow, stemming back from the beginning of March, as well as back in the middle of July. It was a support back in the beginning of June. So in general, 27K, watch that. If that takes out, I mean, that's where we might see a lot of headwind to the upside in the Dow, especially if we get more stimulus. I mean, we have, potential stimulus down the pipeline here. There's a lot of debates going on there in Congress. We'll see in the next couple of days, details, 1 to 2 weeks, more specifics, right? And we all know if there's more money printing, asset prices are going to go up because it's inflating the dollar, right? So people are going to go into asset prices. People that already own assets, right? And people that already own assets, their prices are going to get inflated. That's kind of how things work here. So that's going to end up being good for the stock market, but in the long term, a lot of people are going to pay for it. That's the detriment of it, but we'll get into that in a whole different video. But ultimately, Dow Jones, $27,000. We can see that happening, and from there, 27.6 on the upside. Nasdaq today, like I said, tech did very well, up almost 2%, up almost $200 on the day. Nasdaq ended up double bottoming here. This is a good sign for the bulls, guys. Double bottom at 10,400. Notice how 10,400 was also the resistance back in the beginning of July. So we double bottom there at a previous resistance. Now we're breaking up. That is very good news. So ultimately, I want to see the Nasdaq. I mean, we haven't fully broken out quite yet because I want to see the Nasdaq to break out of this level. You'll see right here, right around 10,700, and ultimately this downtrend from the 20th of July. If we do something like this, look at my cursor here, guys. If we break out of this little resistance, that is where we might see Nasdaq back up to all-time highs. As crazy as that sounds, especially if we get big tech earnings that do very well, that'll assist the Nasdaq to pop back up. And speaking of earnings, and let me know down below in the comments, what do you guys think about the Nasdaq? And another downside level, let's just mention a downside level here, down back at 10,400. So if we fail at 10,700, let's say Google, Amazon, Apple, they disappoint, that's where the Nasdaq probably will be headed to. And even under that, I mean, from 10,400, another target, and you'll see it here better on the 4-hour chart, is going to be around 10,100. So watch 10,100. That's a more downside target. I don't really expect the Nasdaq to get there. I'm being quite honest. I think tech's going higher from here, but you never know. Anything could happen, and it's just worth watching. And speaking of earnings, let me show you guys this calendar. I show it every day because I know new viewers are watching the video every single day. And this is from Earnings Whispers. They don't sponsor my channel, but I simply, love their visuals, and I just screenshot this and show it to you guys. And I give them credit, of course. Go follow them on Instagram. I think their Instagram's at Earnings Whispers. They have a website, so yeah, go check them out. I mean, giving credit where credit's due. I love this stuff. So we can see on Monday, today, we have a bunch of companies that, let's be honest, nobody cares about. But to put it lightly there, or not too lightly. Tomorrow, Tuesday, we have Pfizer. We have AMD, a big company that's been shooting up like crazy ever since Intel has crashed with delays of their chips. We'll get into that in a little bit here. We'll see their stocks in a little bit. We have AMD tomorrow. We have McDonald's, we have Visa, 3M, eBay, Starbucks, Altria. I mean, these are a lot of big companies reporting tomorrow. Wednesday, we have Shopify, Facebook, Boeing, PayPal, Qualcomm, Spotify, General Electric. Thursday, we have UPS, Mastercard, Amazon, Apple, Procter & Gamble, Alphabet, Kraft Heinz here. We have Newmont, a gold company. And speaking of gold, they're at all-time highs. Gold is at all-time highs right now, and a lot of gold stocks are crushing it as well. And then on Friday, we have Exxon, AbbVie, Pinterest, Caterpillar, and we'll get into Caterpillar here in a minute. So a lot of companies are reporting this week. A lot of big companies are reporting this week. And heading into this week, it was a stat, 26% of the S&P 500 companies have reported. So 75% still has to go, guys, and this could easily fluctuate the market as well as this Thursday. We talked about this yesterday. We have a GDP number coming out. We're going to see the second quarter GDP numbers, and economists are estimating a 35% drop on a quarter-over-quarter annualized basis, which is unbelievable. I'm not sure if that's a record. I think it is a record. I wouldn't be surprised if it was a record. And we're also having a 2-day FOMC meeting this week where Jerome Powell is speaking on Wednesday. So a lot is going on this week, as well as all of those earnings that we just talked about. Now let's talk about very quickly what I personally am doing, kind of how am I positioning myself right now in some of these short-term moves that making. What stocks am I interested in? Netflix. I mean, you guys know that I've been in Netflix here for a couple of trading days. NFLX, I picked up some at $490 per share. I actually added a little bit today. Let me check my notes, at about $487 per share. So I added a little bit more there on Netflix on the upswing. Let me show you guys. We can see it kind of double bottomed, triple bottomed here at about 483, started rallying from there, and that's actually exactly where I started picking up some more Netflix at about 487 again. And ultimately, guys, I think Netflix is a pretty strong opportunity right now for a swing trade. And don't trade this because I'm telling you and telling my experience here. As always, do your own due diligence, do your own research. But I think the sell-off post-earnings was a bit overblown. If I'm remembering correctly, they added more subscribers in the first half of 2020 versus all of 2019. I was reading this. I might be wrong on that. I could be tweaking the data in my head a little bit here. But they did very well in the first quarter, the first half, and the guidance for quarter three is where kind of it's not looking too hot, right? Or for the rest of the year at that. And a lot of companies are like that. I mean, a lot of companies are not even reporting guidance. So I think it's overblown. They had a very good first half of the year. The growth is still there, and it's going to continue to grow, obviously, as they're expanding internationally with all of these new countries, all of these new movies, shows in different languages. I mean, I think it's a pretty solid opportunity for a swing trade. Is it a great long-term investment? For sure. At these prices, I'm not sure. It might be a bit overvalued if you're looking to hold 10 years out, but as a swing trade, in the short term, I definitely think there's a lot of money here, and maybe even long term. I mean, from $500, if Netflix goes to $1,000 in 10 years, I mean, annualized, that's a pretty solid return. So yeah, let me know what you guys think down below for Netflix. I think it overblew. The stock rather was overblown after earnings, and I think this is a pretty solid opportunity. I'd love to know, and that's kind of what I'm doing there. And Microsoft, guys, I'm also in Microsoft, MSFT. I picked up a little bit of this on Friday, and I got in at $200.50. So ultimately at this point, I'm up about $3 on my position, and it's a very small position at that. I didn't add a lot. I didn't add more to it today, but I'm just holding what I had, and I might add more tomorrow if this uptrend, if this push in the tech stocks, the Nasdaq, the markets in general, if it continues, right? If it does, let's say we get 205 Microsoft, I might feel comfortable averaging up a bit there. Maybe 204. 206, we'll see what ends up happening. But at this point, I'm holding some at $200 $3.50. And I'm also still in Workhorse Group here, guys. I got into this one like 3-ish weeks ago at about $16.40. Still holding onto that position. As you guys can see, I mean, the technicals don't look that bad. It's just simply consolidating. I mean, we're holding 1450 as a very strong base. Let me extend this to the right very quickly so you guys can see this. Very strong base. Even today and yes, the previous trading day we held that. And the resistance is around 1650, right? Right around my average cost. So I'm thinking, Workhorse, it's going to obviously pick a direction. I'm thinking it's up, or else I would not be holding my shares right now. And I'm thinking, if it takes out 1650, there's another gap up there to about $18, which is where I'd probably sell out a little bit. And if it breaks that is where we might be rallying back into the 20s, guys. Who knows, especially if we get some good news around the company. And let's say it breaks 1450, 1470, that's probably where I'd cut losses, especially if it took a big dive down, let's say into the high 13s, low 13s, and it completely took out the support. So ultimately, that is what I'm doing in terms of my trades. I'd love to know what you guys did. Let me know down below in the comments section as always. Now, let's get into some other companies here, some stocks that a lot of these are on the verge of breakout, and they report earnings this week, so you guys should be tuning into them. eBay, excuse me, guys, a little dry throat here, but eBay is the first one that I'm personally watching here that did very well today, up about 4%. They report earnings actually tomorrow, so mark it, guys. And again, they had a 4% day today, and we see that the stock, despite it doing well today, it's still in a little downtrend here on the hourly. So for tomorrow, I'm looking in general, and we can see a resistance at 1570. Take a look at this. I'm looking in general. Do we take out 1570, which we actually held back really ever since the beginning of July into the middle of July? We held that a bunch of times. Do we take that level out, break the downtrend? If we do, especially with the strong earnings report, from eBay, that could really be a recipe for a breakout in the stock. And if we zoom back out a bit, let's say to the 3-year chart, it's at all-time highs. $61 was an all-time high, so keep an eye on that, guys. And on this 3-year chart, we're noticing a green candlestick forming, which is strong. On the yearly chart, you're seeing that as well, which is also strong. So watch in general on this 4-hour chart, like I said, the overall downtrend and this 50 SMA. If that ends up breaking out, guys, that is when we can get back to about $60, $61 per share. And FedEx is probably, I'd say it does have more potential than eBay at this point. Today it was up 3.4%, took out 170, although it didn't completely take it out. We did break up above it a little bit here. Tomorrow is going to be, this whole week, quite honestly, is going to be a big teller in terms of where FedEx is going. But the fact that it peaked above 170 is very good. And let me explain why. If we're taking a look here at the macro chart on FedEx, I mean, 170, it's been struggling there ever since 2019, guys, back in June of 2019. So if we end up taking this level out, especially on top of the very strong earnings FedEx had, I mean, they actually reported about a month ago. If you guys don't remember, let me refresh your memories a little bit here. If we pull up FedEx, they reported earnings $2.53 estimated, and that's what they reported, $2.53. The estimate was about $1.40, and the stock went from $135 up to about $165. So it went up about $30 on those earnings, and ever since then, it's pretty much played out like I said in the earnings when they reported earnings about a month ago. I said FedEx, I wouldn't buy it at this peak here because of the potential drop, but I'd wait for consolidation. And guess what? We waited for consolidation. It's a month later. We got that consolidation and the slow uprise back to 170 now. And now is when I'm looking to take the position. And this goes to show, guys, trading it takes some time to map out your positions. It takes a lot of patience. It's not always you see a stock then you throw money at it right away. I saw FedEx about 4 weeks ago, and I knew it was a good opportunity, but I didn't want to jump into it quite yet because of the fact it could have dropped and sold back off, let's say, to 145. But now that we haven't done that, we've consolidated at 155, held that as a pretty strong base. Now we're rallying up to 170. This is where I'd want to get into the upwards momentum. So from 170 up to, let's say, 185, that is where I'm looking on FedEx here. That's around an 8% move. And guys, even above that, this stock has just been beaten down. You can see it was at 274 back in the beginning of 2018. I mean, even above 180, there's another gap up to about 197.200. Is that the next spot that FedEx can go to? I think so. It's going to take time, but this is on the verge of breakout. Ticker symbol FDX. And another one here that could be on the verge of breakout, it's been doing well, is Caterpillar. Ticker symbol CAT, at a resistance just like FedEx, but Caterpillar here is at $140, and it's been a resistance, guys, get this, for about a year and a half. Ever since about November of 2018, Caterpillar's been struggling at 140. So from 140, the next spot I'm looking at, quite honestly, if it breaks, is 150. And like I said, Caterpillar is reporting on the 31st of July, which just happens to be this week, Friday. And I like when companies report on Friday, guys, especially if the company is projected to have strong earnings, right? Because in that case, the stock can rally into the earnings. And me personally, I don't like holding through earnings, especially if I'm trading the stock short term. I like getting out before earnings. So a rally into earnings is like perfect for me. So I'm looking for this on Caterpillar. If this thing could rally from, let's say, 140 to 145. I don't think it'll get to 150 within 1 week. I mean, that's a bit out there. Anything could happen. But if it went from 140, if it took out this big resistance, went to 145, I'd be happy with that. 150 would be even better. And you guys can see 150 is where we saw big resistance back towards the end of 2019, stemming back also, about 2 years ago. So there's a lot of potential here, I think, from 140, 150 and above on Caterpillar. Mastercard is another one, ticker symbol MA. Today it was up 0.6%, up about $2 per share. And the fact that it's holding this point, let me show you guys here on the 30-day chart. The fact that it's holding 308, that was a resistance stemming back from the middle of June. We triple topped there. We also got rejected there in the beginning of July, middle of July. So 308, the fact that it's holding, we had a green day today, that's a good sign. And ultimately, I would like to get Mastercard. I'm going to set an alert, quite honestly, at $310. I'll go after when this video is over. I'll set alerts on all the other stocks we talked about as well. But 310, let me set it actually. $310. Mark is at or above 310. So let's say Mastercard breaks 310. ThinkOrSwim's going to alert me, and I'm going to look to make the move up to 317, right? And Mastercard reports earnings, I believe, on Friday as well, same as Caterpillar. Actually, no, on Thursday, on the 30th of July. So watch out for that. And even above 317, guys, I mean, Mastercard's actually been one that I've been buying in my long-term account as well in these prices. I think even above 300, 315 especially, we could get back to the mid-300s. I mean, this stock was $350 before this crisis. So watch for that move to happen there on ticker symbol MA. Tesla, let's run through Tesla very quickly. What a bounce back day on Tesla, up 8.5% today, up $122. We're seeing a bit of resistance under the 50 SMA here on the 4-hour chart, as well as under the general 1600 level, although we didn't get there. I'd feel comfortable getting into a swing on Tesla if it breaks 1600, because I'm scared to buy in and get trapped under this resistance. So at this point, good job on Tesla for rallying out, right? This is a very good sign for the bulls, but they're not fully in charge quite yet. I'd be careful, right? I'd probably end up getting in maybe 1600, 1605. We'll see what ends up happening, but watch for what it does in this range between about 1430 and 1600, because that is where it's trading, and it's kind of been bouncing back and forth that range over these past couple of days. And watch NIO, N-I-O, another electric vehicle company based out in China. Watch them as they've been holding $10 over the past couple of trading days. They tested it once here on the 17th of July. They tested it again today. Actually, not $10, $11. They tested it back in the middle of July, here today again, and on the 24th of July as well. Although it's it's still downtrending overall. It's still an opportunity. If it ends up breaking out, I'd say above $12. That's where I think it can start rallying, but it could still go either way. Honestly, it can still go either way, as main moving averages are still acting as resistance here on the hourly chart. And let's say if it breaks $11 on the downside, guys, we might be getting to even more favorable prices, which I wouldn't be opposed to. I wouldn't mind if NIO got down to like $8, $9, $10. I'd buy even more NIO at that point. But at this point, it's not doing that. It's hovering at about $11, and we'll see what ends up happening from there. So 3 more companies here. 3M, they're reporting earnings this week on the 28th. That's tomorrow. They broke out of 160, big resistance. Next big resistance, 166. And from there, there's breakout potential, guys, up to the mid-170s. That's the next range that it's going to be trading in. That could give around a 4 to 5% potential. And mind you, 3M, it's not a tech stock. It's not a running 5% in a day. It might take a bit to get and fill that range up, right, to get that 5%, but still, for the more conservative investor, if you want a dividend along with that, because it does pay a dividend, it's a dividend king, 3M could be for you, right? And again, trade at your own risk. Like I always say in these videos, do your own due diligence, guys. MO, Altria, they're also reporting, and they're also at a big level of resistance. And you see a pattern here in this video, guys. All of these videos, or these stocks rather, they're at a big resistance, right? They're at a point where if they take the resistance out, have a strong earnings, the stock could be pushing up to the next level. Altria at this point, 42.50, 42.50, that general range has been a sticking point ever since the middle of April. We failed there once, twice, 3, 4, 5 times, and today is the 6th time. We didn't fail quite yet. We didn't break it out quite yet, but we're just waiting to see what happens. And I'm thinking if Altria takes out 42, especially 43, 44, that is where we might be seeing the stock back up to low, not low 50s, high 40s. 47 is the next big resistance here. That stems back from, let's see here on the 3-year chart. That stems back from, let's say, actually the beginning of 2019, right? So from where we are now up to $47, that could be a move here on Altria. And same with 3M, guys. It's not a tech stock. It might move slow, but it pays a dividend as well. And INTC, we talked about Intel earlier in the video very briefly. They got slammed, and a lot of people are saying, Stas, could this be a recovery play? Truthfully, I think it can be. But one bad thing now is that it seems like all the analysts out there are turning against Intel ever since they delayed their chips, big chips, to chip launch to 2022. That ended up shooting the stock down. I mean, the stock went down 16% on that news. AMD went up 16%. It's like they flip-flopped. It's insane. And analysts are saying now that this delay is very good for AMD, which is why that makes sense at the end of the day. And honestly, it's a difficult play. I mean, analysts are against the stock, dropping their targets, going from buy to neutral. A lot of these analysts are doing this right now in Intel. We don't know exactly what the short-term future is, and you can argue we don't know that for any company at this point. Well, for most companies at that. And, for me, it could be a bounce-back play, especially if it holds about $50, which generally is a support here. I mean, 44 is where it got beaten down to. 45 could be where we retest. But if we end up holding 50, start rebounding, I might add some shares. And maybe to get a little bit of leveraged exposure here, I might buy some call options. Honestly, I've been getting questions about that on Intel. Maybe now could be a good time to pick up some cheap call options, maybe 2 years out. Maybe not even 2 years out. That's more safe. If you want to play it safe, maybe 2 years out. But a little bit more risky, maybe like 3 to 6 months out. You could play some calls on the rebound, maybe from 50 back up to the mid-50s, low 60s, right, for a strike price. We'll see what ends up happening with it, but those are some thoughts there on Intel. And watch gold, guys. Gold's up $40 today, hit an all-time high, $1,900, 1941.9 to be exact. That's an all-time high. Previous all-time high was back in April of, no, actually not April. It was actually July of 2011. What are the odds? So exactly 9 years ago, not exactly, about 9 years ago and a month, this hit all-time highs, and today it hit all-time highs again. And watch all these gold ETFs, guys, that I talk about. GDX, I'm watching these. GLD is another one I'm watching. And silver, don't sleep on silver. Silver was up 8% today. Unbelievable. SLV is a silver ETF, was up about 8%. So that's kind of what's on the game plan, what I'm watching for this week. Nothing too crazy. I'd love to know what your thoughts are in the comments down below, as always. And if you guys enjoy the video, all I ask is for you to hit that like button, consider subscribing to the channel, and check out all the free links. The Discord, the Facebook, those are linked down below in the description box. You can also get 2 free stocks from Webull, valued up to $1,400. All you have to do is deposit $100, if I could only talk in this video, guys. Deposit $100 into the platform. And after a couple of trading days, you'll get your 2 free stocks again, valued up to $1,400. Those are all linked down below. I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Peace out.